Welcome back to the Malaysia Money Matters show. It's the 8th of May, 2025, and we're diving straight into the latest financial news. We'll kick things off with updates on Malaysian companies, then look at the international picture, and finally, unpack what we think is the most interesting story today.
Sounds like a plan. There's quite a bit happening, especially locally.
Okay, first up, Affin Group. They've just secured their first ever international credit rating, an A3 from Moody's. What's the significance here?
Well, getting an A3 rating is pretty significant. It basically tells the world that Moody's sees them as having strong finances.
So good fundamentals.
Exactly. Solid asset quality, their bad loan ratio is low, just 1.9%, and a healthy capital ratio too, 14.5%.
And what does this A3 rating do for them?
It boosts their credibility,
Yeah.
especially for international investors. Think trade finance, correspondent banking, that sort of thing. Their president mentioned it supports their Axelerate 2028 plan.
Ah, yes, the plan focusing on customer service, digital leadership.
And responsible banking, yeah. Plus, they had a good jump in profit last year, up 35.3% before tax and zakat. So this rating helps build on that momentum.
Right. Okay, moving on. Pan Merchant. They've signed an underwriting agreement with Affin Hwang Investment Bank for an IPO.
Yes, on the ACE market. They're looking at a public issue of about 232 million new shares, plus an offer for sale of 18 million existing ones.
Which represents quite a chunk of the company.
About 27.3% of the enlarged share capital, yeah. They're aiming to list sometime this quarter, Q2 2025.
And the funds raised.
Usual stuff, really. Capital expenditure, developing new products, expanding the business generally, standard IPO goals.
Got it. Now, Hartalega, the glove maker. Analysts seem concerned about their pricing power.
Yes. The issue is intense competition, particularly from Chinese players in non-US markets. They're apparently undercutting Malaysian companies quite significantly on price.
So that's putting pressure on Hartalega's average selling price, their ASP.
Exactly. TA Securities, for instance, expects another 5% drop quarter on quarter.
Ouch. Even with their new plant running.
Yeah, Plant 8 is fully operational, and they are trying to cut costs, right-sizing the workforce, more automation, but the pricing pressure is, well, intense. Their recent profit actually beat expectations, but forecasts for the next couple of years have been trimmed back.
A tough environment. Okay, how about Sarawak Plantation? Apex Securities expects strong Q1 earnings.
Yes, mainly because CPO prices were quite firm earlier in the year. That should boost their first quarter results for FY 2025.
But the outlook isn't quite as rosy for the rest of the year.
Potentially softer, yes. CPO prices have weakened since then. Plus, they're doing a lot of replanting, which is good long-term, but means more immature areas now.
So less production from their own estates.
Possibly. But they plan to offset that by buying more fresh fruit bunches from third parties, aiming for a 25% year-on-year increase in those purchases.
Interesting strategy. Now let's talk interest rates. CGS International is floating the idea of a potential OPR cut by Bank Negara in 2025.
Yeah, a possible 25 basis point cut. It's still speculation, but if it happens, it wouldn't affect all banks equally.
How so?
Well, banks like Bank Islam and Alliance Bank could see earnings impacted more negatively. They have high proportions of floating rate loans here in Malaysia and also rely heavily on CASA deposits, current and savings accounts, which are cheaper funding sources that become less advantageous when rates fall.
And the flip side.
On the other hand, Affin Bank and AMMB might actually benefit, maybe in FY26. They have relatively more non-CASA funding compared to their floating rate loan books, so a rate cut could help their margins.
Fascinating how it plays out differently. Like Capital A, AirAsia's parent, big expansion plans into Saudi Arabia.
Seems like it. New routes from KL to Riyadh and Dammam, more flights to Jeddah. They're even looking at routes from Bangkok and Jakarta.
And it's not just flights, is it?
No, they're looking across the board.
Right.
Teleport for logistics, ADE for engineering, AirAsia Moody for the digital travel side. They see big opportunities aligning with Saudi Vision 2030.
They also got shareholder approval for their regularization plan, right? To exit PN17 status.
They did. It involves reducing share capital and reorganizing things. But it's worth noting the auditors raised concerns about their ability to continue as a going concern, given the reliance on asset sales. They're aiming to get the restructuring done by June 2025, though.
Okay, watching brief on that one. Genting Malaysia, their takeover of Genting Empire Resorts in New York, isn't getting rave reviews from credit sites.
No, they view it as credit negative. The main worry is Genting Malaysia taking on more debt to prop up Empire Resorts, or ERI, which has weak earnings and faces tough competition in New York.
So it increases their New York footprint, but at a cost?
Essentially, yes. It's expected to worsen Genting Malaysia's leverage, their debt levels. Plus, there are always concerns around related party transactions in these situations.
Understood. Let's check in on Franken. Expected to rebound after a weak Q1?
That's the forecast from Apex Securities. They see recovery coming from the oil and gas segment, plus maybe some benefit from a stronger Taiwan dollar.
But some uncertainties remain.
Yeah, potential U.S. tariffs are still a cloud, and also the impact of a key Taiwanese client investing heavily in the U.S. Long term, though, semiconductor expansion is still seen as positive for them.
Okay. Hector Reet, the mall owner, partnering with Sam Aiden for solar power.
That's right, installing solar PV systems across 5 of their shopping centers. And crucially, it's under a zero capex model.
Meaning Hector doesn't pay up front.
Exactly. Sam Aiden handles the installation and operation. Hector benefits from lower energy costs long-term and reduced carbon emissions. Sounds like a win-win.
Seems sensible. IBHD, the ICT developer, reported a strong Q1 profit jump.
More than doubled, yeah.
No.
Driven by property development, like their Central Towers, and also good contributions from their investment properties, Mercury Bank, Central iCity Mall.
Yeah.
They're also hopeful about leisure and hospitality picking up with domestic tourism.
Good news for them. Another IPO coming up, TMCK, a healthcare provider.
Yes, targeting the ACE market as well. Probably in Q3 2025, they've signed an underwriting deal with Malacca Securities.
And the funds.
Mainly for their PMC Kulim project. Some debt repayment and listing expenses, too.
Right. Malaysia has imposed anti-dumping duties on PT imports.
Yes, from Indonesia and China, effective May 7th for 5 years. The investigation found these imports were sold below fair value and were hurting the local industry, specifically Recron.
Leveling the playing field, essentially.
That's the idea. The duties are quite high for Indonesia, over 37%, and range from about 2% to nearly 12% for China.
Okay. SD Guthrie, formerly Sime Darby Plantation, doubled its profit in Q1.
Pretty much, yeah. Strong performance in their upstream segment was the key driver. Higher CPO and palm kernel prices, plus more fresh fruit bunch production.
Even though the downstream segment was weaker?
It offset the weaker downstream results. They do expect CPO prices to soften a bit in the near term, though.
And Sime Darby itself. HLEV expects good dividends despite the slowdown.
They do. They're maintaining a buy call that have actually trimmed the target price slightly.
Why the trim?
Just reflecting heightened global economic risks. They see moderation in the industrial market and ongoing competition in China's auto market, which affects Semdarby's motors division, but the dividend yield is still expected to be solid.
Okay. UOB Malaysia had a record year.
Record high net profit before tax for FY 2024, yes. RM 2.2 billion, up nearly 16%.
What drove that?
Higher operating income across the board, lower expenses, and importantly, a big drop in expected credit losses. Their loan book grew too. A strong performance all around.
Good to hear. Equinix is expanding its data center presence.
Yes, they've completed phase 2 of their KL1 facility in Cyberjaya, adding 450 cabinets. They've invested quite a bit already and are planning a second site, KL2, in Kuala Lumpur. Shows the demand for data infrastructure here.
Definitely a growing area.
Yeah.
And finally, on the local front, PNB is considering an exchangeable bond sale.
Yeah, potentially reviving plans to raise funds for overseas expansion. It would be their first such offering. They're working with advisors on it. Shows a strategic push for diversification.
Okay, quite a lot happening locally. Let's shift gears now to the international and political scene. AMD first, U.S. restrictions hitting their China sales.
Significantly, they're saying it'll cost them about US $1.5 billion in revenue this year, specifically hitting sales of their MI308 chips to China.
Wow, that's a big number.
It is, and it kind of overshadowed their otherwise pretty positive sales outlook, which is being driven by general AI demand and new chips coming soon. Really highlights the impact of those US-China tech tensions.
Speaking of which, NVIDIA CEO Jensen Huang is making a case against further restrictions on China.
He is. He's arguing the AI chip market in China could be worth US $50 billion soon, and it's crucial for US firms to be in that market. He's even framing it as a national security issue for the US not to be involved.
Interesting take. Meanwhile, China's taking steps to stimulate its own economy.
Yeah, they've cut a key policy rate, the 7-day reverse repo rate, and also lowered the reserve requirement ratio for banks.
Aiming to boost lending and lower borrowing costs.
Exactly, trying to counteract some of the economic headwinds, including those from the trade frictions with the U.S.
And speaking of those frictions, U.S.-China trade talks are happening this weekend in Geneva.
That's right. First significant talks since the latest round of tariff hikes. It's quite notable they're meeting at all.
What's expected on the agenda?
Likely tariffs, export controls, Maybe the de minimis rules for imports. Both sides have made noises about needing to de-escalate, so we'll see.
We'll come back to that. China also keeps buying gold.
6th month in a row, they've increased their gold reserves as of April. It's part of a broader trend among central banks diversifying away from the dollar amidst all the uncertainty.
And trade tensions aren't just U.S.-China. The EU is threatening tariffs on Boeing.
Potentially, yes. If the upcoming talks with the U.S. don't de-escalate things, it's retaliation for U.S. tariffs on EU goods. It just shows how these disputes can spread.
Oil prices saw a bit of a lift.
A little bit, yeah. Some optimism from the U.S.-China talks, plus signs of maybe lower U.S. oil production, but
Still low overall.
yeah, both benchmarks are still near recent lows, mainly because OPEC Plus decided to start increasing output again. Supply concerns are capping prices.
In the UK, market watchers are focused on the Bank of England.
Their upcoming meeting's key. There's speculation they might pause their bond-selling program quantitative tightening, especially after recent market volatility caused them to delay a gilt auction.
Interesting times for the BOE.
Yeah.
And finally, world stocks.
Mostly stable, kind of treading water. Markets are really focused on those U.S.-China talks and what the U.S. Federal Reserve decides on interest rates. Cautious optimism, maybe, but mostly just caution.
Okay, a lot to digest there on the global front, too. So let's pull back and think about the single most exciting or perhaps most impactful story for our listeners today. What jumps out?
For me, it has to be those U.S.-China trade talks in Geneva this weekend.
Yeah.
I mean, the very fact they're happening.
Yeah, after the tariff hikes, the rhetoric, it felt like things were just escalating.
Yeah.
A U.S. official even called it effectively a trade embargo. So them sitting down is, well, it's something.
Exactly. It signals a potential shift, or at least an attempt to manage the situation rather than just letting it spiral. And for you listening, especially if your business is tied into global supply chains, manufacturing, tech, commodities,
The outcome could really matter.
hugely. It could affect demand, logistics, currency exchange rates. The ripple effects could be quite significant for Malaysia.
And it's interesting timing, isn't it? With China simultaneously easing its monetary policy.
That's a really key point. Lowering rates, cutting reserve ratios. It suggests China is definitely feeling the pressure and is trying to cushion its economy, perhaps preparing for different outcomes from these talks.
Hedging their bets, maybe?
Could be. Or just trying to create the best possible domestic conditions regardless of the outcome. It shows the stakes are incredibly high.
So what should people be looking out for in the news coming out of Geneva? What are the key signals?
Well, the ideal scenario, I suppose, would be some concrete announcement about rolling back some tariffs. Even a small step in that direction would be a positive signal.
A sign of genuine de-escalation.
Precisely. Conversely, if the talks end with just vague statements, or worse, finger-pointing, then that uncertainty that's weighing on markets, it's likely to continue or even increase.
So any sign of actual progress on tariffs is the main thing to watch.
I think so. That and the general tone. Is there a willingness to find common ground, or is it just restating old positions? It really could be a pivotal moment for the global economy.
Definitely a story with direct relevance here. It really underscores how interconnected everything is.
Absolutely. What happens in Geneva this weekend could easily impact your investments, your business, your job, right here in Malaysia.
Okay, that's our quick rundown for today, 8th May, 2025. We hope this dive into the news has given you a clearer picture and highlighted what really matters for your finances.
Yeah, lots to keep an eye on, especially those trade talks.
To stay updated with more crucial financial insights like these, make sure you subscribe to the Malaysia Money Matters podcast. You can find us wherever you usually get your audio content.
We'll be back soon with more analysis. Thanks for tuning in.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.